Again, welcome to this discussion on navigating regulation and enhancing ESG compliance in finance. And we were talking this morning, I think with X, formerly known as Twitter, and Binance and OpenAI, it's the gift that keeps on giving. There are elements of those breaking news stories that we'll be able to weave into this conversation this morning to keep it extra interesting. But just really quick, in terms of preparing for this discussion this morning, we were talking a little bit about having some remarks just to set the stage and the foundation for the discussion. I think there are people here in the room that are deeply entrenched in ESG regulation and others who might have a bit of a passing interest on the topic. So we wanted to just provide some remarks and scene setting here, and then we'll get into introductions. I'll introduce our panelists, and then we'll start this great discussion. So we wanted to really impart that the landscape of global finance today, ESG factors and regulation are pivotal in the industry right now because ESG has become extremely important for long-term investors who are increasingly looking at material issues such as climate risk, data and cybersecurity, and board quality, which are all important metrics of the E, the S, and the G related to companies they invest in. And why is this? The investing world continues to prioritize the importance of companies who are interested and hold as a core value protecting the planet. And investment companies are increasingly looking to prioritize companies who understand and mitigate geopolitical or cyber risk as key components of their business. Similarly, investment companies are prioritizing companies with more effective corporate governance. And related to this, studies have shown that corporations with high ESG ratings and a focus on ESG management and measurement actually outperform those who don't. And ESG investing allows firms to marry their investment decisions with their own core value system. And more recently, the tide has shifted in terms of consideration of ESG factors are now viewed as a fiduciary duty of investment managers. Enter regulation and finance. And so quickly, as we look around the world, starting with the EU, for example, under the EU Green Deal, they're preparing for sweeping sustainability disclosure and reporting rules via the Corporate Sustainability Reporting Directive, or the CSRD. This includes a debate around whether or not to include financial firms in a new Corporate Sustainability Due Diligence Directive. So there's a little bit of flavor for the EU. In the US, the SEC will be setting out new regulation, which is a shift from current voluntary ESG regulatory reporting to mandatory reporting. And the SEC should have had those rules finalized this year, but for a range of reasons, they're shifting into next year. However, California is already leading the charge with its California Climate Corporate Data Accountability Act. And then we shift gears over here to the Middle East. We have COP28 right around the corner, where ESG will be central to that conference. And while the UAE and Saudi Arabia are leading the charge in sustainable finance and regulatory reporting, Bahrain, Qatar, Kuwait, and Oman are also focused on a range of issues related to sustainable finance, adoption of ESG frameworks, and encouraging voluntary sustainability reporting. So with all of that, emerging global regulation, key buzzwords that we're hearing around ESG related to double materiality, or we hear about greenwashing, we've brought in the experts to talk us through it. So really quickly, I'll introduce myself, I'll introduce our great panelists, and then we'll kick this off. So again, my name is Courtney Adante. I'm president of Risk Advisory within Taneo, and Taneo is a global CEO advisory services firm. We're headquartered in New York, and our business is structured across 5 divisions: strategic communications, management consulting, financial advisory, people advisory, and risk advisory, which is the business I run. And we've got 43 offices around the world with over 120 people here in the Middle East across Dubai, Doha, Abu Dhabi, and Riyadh. For me, my specific focus is on corporate resilience and crisis management, and that could be a crisis supporting clients, whether it's a cyber attack, market disruption, man-made or natural disaster, or some type of reputational challenge. I've been with the company for 10 years, and prior to Taneo, I was an executive with Accenture in the financial services vertical, and I mostly focused on regulatory and compliance initiatives with Accenture. I am, however, the least interesting and important person up here today. I'd love to introduce my 3 panelists now. I'll start with Molly Cader. We just got to know each other. Molly's the CEO of the Middle East Institute of Directors. As CEO, she provides advanced corporate governance advisory and training to a number of prestigious organizations. And since 2007, she founded the first sustainability advisory business in the Middle East and has been an active part of the evolution of ESG in the Middle East. And since 2012 is founder and board member of Jordan Institute of Directors, which is now expanded to the Middle East Institute of Directors. Molly has driven excellence across a number of leading organizations, including the Arab Bank, Seniora Food, and MedGolf. Joining us this morning, we also have Lawrence P. Paramissivim. He's instructed me to probably shorten that, I'll butcher it, which I did. But Lawrence is the Senior Executive Director of the Policy and Legal Division at the Financial Services Regulatory Authority at Abu Dhabi Global Market. He's responsible for overseeing the FSRA's policy and legal teams. Lawrence took up this role with ADGM in April 2021 with 25 years of legal, financial services, regulatory, financial crime, and leadership experience. And then, of course, last but not least, we have Brian Stierwald here. And Brian just took a new position with EY as the MENA Financial Services Regulatory Lead. And in Brian's role, he works with key regulators and jurisdictions around the world to develop future of finance strategies, including crypto regimes and central bank digital currencies. He also works with fintech companies in building compliance programs. And prior to EY, Brian was senior managing director with K2 Integrity, and before joining K2, Brian spent more than 14 years at the Dubai Financial Services Authority, most recently as its chief executive. And I believe you and Lawrence know each other from that prior life too, correct?
Very well.
Yep, so wonderful. And when I read their bios, it makes me wonder what I've been doing with the last 30 years of my life. So welcome, everybody, and let's get into the questions. So we thought it would be helpful to start with a macro perspective about global ESG regulation and drill down into some of the trends and issues that we're hearing about. I'd actually like to start with Lawrence. Given the topic is navigating regulation and ESG compliance in finance, I wanted to ask about your perspective, given your role with the Financial Services Regulatory Authority at ADGM. Could you help us further set the stage for global ESG regulation, and is it really driven by the E, the S, the G, or a combination of all three?
Great, thank you, and thank you to Wealth Today and the sponsors for inviting us to this particular event. What I would say as a starting point is that ESG, sustainable finance, has been a regulatory priority, a strategic priority for the UAE, Abu Dhabi and ADGM for a number of years. Within ADGM, we developed our sustainable finance agenda about 4 years ago now, and it has the acronym RACE: regulation, awareness, collaboration and ecosystem. And very much regulation, obviously, in my role is of key interest, and there's been a number of regulations issued here at a UAE level, but in particular also within Abu Dhabi and ADGM. And this year we saw ADGM a few months ago now issue its sustainable finance regulatory framework. And we're really excited about this framework because it was done after consulting with all our stakeholders, both locally and overseas, but also having a look at the international standards that are being adopted in parts of the world, as you mentioned, Europe and the US and Asia and so forth. But in particular, our framework focuses on products, and it's all about raising and channeling funds into the sustainable area. So we've introduced green funds, a framework for green funds, which very much looks at investing in those green assets aligned to a taxonomy, and where they're public funds, that they need to be attested by a third party. So trying to address those greenwashing type risks. But the particular product we're really excited about is our climate transition funds. So we know that 95% of assets aren't green, and so we need to move those assets into that right direction. And so the net transition and the transition targets that the UAE and others have set can only happen if we can get that capital flowing into the areas that require funding. So this framework has been established, and finally we've issued a framework around ESG disclosure within ADGM. So it's a comply or explain proposals. It sets particular thresholds around assets under management and turnover, and again we've created a bit of flexibility, but it's been great to see the ISSB now issue some international reporting standards on climate-related risks and sustainability-related risks, and so that should be coming through. The second area quickly I wanted to mention is our carbon market. So this is another really important area, and ADGM came up with a framework to regulate carbon offsets and carbon allowances, what we call environmental instruments. and it was really great last year to announce the first regulated voluntary carbon exchange and clearinghouse Air Carbon, which has decided to house itself in ADGM. So again, this is an area that even the international standard setters like IOSCO are focusing on. They've issued papers around compliance carbon markets and voluntary ones. And finally, the UAE's really done well to set up the UAE Sustainable Finance Working Group, which has been in operation for the last few years. And all the regulators and exchanges and ministries have been participating in this. And so ADGM play a coordination role, but what we've really seen is now some of the products coming out. So we saw the authorities issue the principles for effective management of climate-related risks. So these were published. It was led by the Central Bank of the UAE and very much adopts similar principles issued by the banking standard-setting body BCBS. There's 7 high-level principles, and it very much applies across to governance issues, risk management issues across financial institutions. So I might just pause there. So that covers a little bit around what's happening in UAE and Abu Dhabi in particular.
Well, you gave me a really good transition there on the governance topic that you mentioned. And Molly, I'd love to hear your thoughts in terms of trends or issues and what's driving the G in the ESG space.
Thank you very much, and good morning, everybody. Thank you, Lawrence. That was very eye-opening. I think compliance, personally, I like to move away from ESG compliance. I come from a legal background as well, so I do understand the regulatory environment and the regulatory limitations. But for ESG to be truly effective, I think we need to look at opportunities, not a compliance mindset. I think it's important to focus on areas that ESG can help organizations do business differently and better, not just to approach in a tick-boxing exercise, do things in compliance with the regulatory framework. Having said that, and to answer your question, Courtney, I think from a governance perspective, the focus has been on accountability. As I think Mr. Mohammed mentioned earlier this morning, it is important. Without accountability on how we are handling the E and S, it will never really take off. And so the governance of how these issues are identified as material, how they're being addressed, how they're being handled, how they're being embedded, integrated, reported on, all of which falls under the G umbrella. I tend to like to think of it as ESG squared, because you have governance for the organization and governance for E and S as well. So the drive, the change, the regulatory change in that perspective, there's increased regulations on governance, what that entails, what that means, board requirements, board composition, board training, board evaluation. There's been an increasing drive towards more regulating governance a lot more. I think that answers the question. Thank you.
Yeah. And so, Brian, I mean, you've held the senior role at DFSA, and so I would love just from your perspective and the roles that you've had since then with now consulting firms and dealing with a range of clients around the world, around global jurisdictions, love to get your comments on what you've seen as trends and changes over the years.
Yeah, thank you on that. So as Lawrence was speaking, I still have my DFSA hat on, thinking, oh, maybe I should outline the DFSA and DIFC agenda, but I'm not going to do that. I'm going to give credit to Lawrence, I think, for what ADGM has done, what the DIFC has done, but really overall what the UAE has done across each one of these metrics, the ES and the G. And more often than not, when you hear somebody start talking about ESG, 95% of the time they drift to the E. You know that everyone wants to talk about sustainable finance, everyone wants to talk about climate change issues, which are critically important. And the UAE, I think, is very underappreciated in this space because it's a heavy carbon region and a heavy carbon country. But when you look around and you get inside the UAE, you see the great diversification of the economy, and you see the amazing amounts of investment they've made in solar, the amazing amount of investment that they've made in non-carbon initiatives, which I just don't think they get enough credit for. But at COP28, I think they are going to get credit for a number of these initiatives. So the E is a critical factor here, and sustainable finance is absolutely critical. And when you break it down into the physical and the transition risks, I mean, the physical risks are evident every day. I mean, you can argue all day long about who caused this, or what caused this. But at the end of the day, there are some parts of the world who are becoming uninsurable. So you can't argue about the effect. You can argue about cause. You cannot argue about the effect. And therefore, we need to take some action. And that's where you get into some debate on the transition elements. And Lawrence mentioned the transition fund, that's critical of how do you measure that. And again, it's not a light switch. And I think this is where politicians get many things wrong, that you have people on the right and the left thinking, okay, we now must defund everything carbon. And that doesn't work, and it's not true. You can reduce carbon, and you have to have targets that are a 20 and 30-year target. And that's where, again, where the UAE has an advantage, that they're not on a 4-year election cycle. So critical that you have targets that move to the transition. And on the S, which suffers from the middle child syndrome, I guess, that no one talks about the S, but absolutely critical that we have data privacy, data security, and cyber risk and resilience are a part of every agenda, and very much associated with the wealth sector, of making sure that data is protected and can't be stolen. And the G, and I'm very interested to talk to Molly today and even afterwards, because the G drives everything. At the end of the day, if you've got poor governance, you're not going to get the E and the S right. And the G has been there forever. I sometimes wish, I think as Molly said, that we talk about them as E, S, and G, not ESG. The G's been there forever, but to me it boils down to 3 words: what you must do, what you should do, what you could do, is how you govern an organization. And maybe I'll just end it there on a soapbox.
Well, on the G front, this is where I think I want to introduce some of the topical stories that we've been reading about in the news. Let's pretend that OpenAI, let's pretend that X were publicly traded companies right now. I think there'd be a lot of raised eyebrows and question marks about governance decisions and governance writ large with those companies. If they were publicly traded and I was an investor, what would be just thoughts going through your mind about what these boards need to be thinking about and doing differently now? Given the breaking news and the challenges that they've had, has that set a tone now for other boards to think about, we better clean up or think about our own communications, our own positioning, and how this board governs? I'm just curious if you could bring some of the breaking news to life on the ESG front, especially when we think about investing and regulation. Anybody? Yeah, sure.
Well, I mean, I think the youth are heavily considerate of each one of these components in how they not only invest, of where they look to be employed, and how they expect to be treated as a stakeholder in any company. And X is a case study that's not finished writing on that front of how it has changed from being publicly traded to privately owned, and what has happened to their real raison d'etre, I guess, in life. So the youth are going to expect this, and if the youth expect it, then people are going to have to start disclosing it better. And the fintech environment, which I think is alive and well here too in the UAE, is going to play a critical role in being able to scrub data. And if a company doesn't disclose, the fintech environment will have a rating system soon. That will flash red, orange, and green lights toward investment.
Yeah, Molly, love to hear your thoughts.
I think building on what Brian's saying, the youth will definitely drive a lot of change in the governance perspective. And I think it's delusional for anyone to think, investor, shareholder, employee, young or old, that anybody's going to get it right. AI is a new space. We are venturing into new territories, and I think the key element is transparency. Communicating those challenges, communicating that thought process. You took this decision based on what? You hope to achieve what by following this direction. And by having that transparent disclosure, open stakeholder engagement, these companies can maneuver along the challenges that they're likely to face. We can only envision some of the challenges and obstacles. We cannot really foresee all of the challenges that are likely to come up as a result of OpenAI, X, and all the evolutionary technology that is happening day after day. So transparency, disclosure, stakeholder engagement, accountability, these would be the things that could possibly keep everybody in check.
Yep. Lawrence, love to hear your thoughts too, and then I'll switch gears.
Yeah, sure. I think about this area very similar to the areas for public listed companies about governance. I can remember studies years ago that McKinsey would issue that investors would invest in companies that had good governance and would show the profitability or return that good governance has on listed companies. And in the space of ESG, it's even more so the case, because as we're seeing with investors and youth, they're very much driven around the footprint that a company will have. And so, and this is where also regulation and legislation plays its part to try to make sure that there are, first of all, harmonisation around disclosure standards, but also that that regulators and governments hold institutions accountable. And very much this is done not just through regulation, but also through investors who ultimately will have an influence in and around how companies are run.
Yeah. And while we're talking about kind of these emerging stories and the future of AI and all of that, and expectations around corporate governance for some of these companies that are in this space, crypto obviously is a huge topic, and I know the UAE has been very globally welcoming and embracing of decentralized finance and crypto. And Brian, I'd love to get your thoughts. I know that is a focus area for you on how the UAE has been successful in that realm, and what you're seeing as the trends in regulation, and what companies are starting to do more and more to probably, I'd say, restore a little bit of faith again. We've had some challenges in the crypto space over the last decade.
Yeah, challenges is an understatement, I think, for that industry, because it grew up completely outside of regulation. And so its investor base weren't protected, and now they're getting protected. That I think governments are realizing, and the UAE has put this, squarely in the strategy of the country to embrace virtual assets. But what that means is virtual assets should have a control framework that sits behind it, a regulatory framework that sits behind it. So each one of the regulators in the UAE, and the UAE has several of them, in the DIFC and the ADGM, the Central Bank, the Securities and Commodities Authority, and VARA, the Virtual Asset Regulatory Authority of Dubai, are all putting together frameworks to get this right. And what that means is that companies have to be regulated, customers have to be onboarded properly, they have to have risks disclosed to them, and that will make the sector thrive and move itself into a reasonable investment or a reasonable buying opportunity for people that they feel protected. So it's been the Wild West, but I grew up in the middle part of the U.S., so I always say that the Wild West is moving to the Midwest. The Midwest may be slightly more boring, but the Midwest is a little bit safer, and that's where the sector's headed.
You mentioned tools and frameworks, and since we're talking about navigating and enhancing for this conversation, Lawrence, from where you sit, what are regulatory authorities trying to do? What are publicly traded companies trying to do to build the types of tools, or share, or create the types of tools and frameworks to be keep up, to navigate, to enhance, and to keep up with investor expectations?
Yeah, sure. So I mentioned the acronym around RACE, and some of those key parts is awareness, collaboration, and ecosystem. And that's something, again, the UAE and ADGM level, we've been working along with a lot of our partners because this is a global problem. We live in a global marketplace, so we need to find ways to address that. And it's a lot like the same approach in financial crime. Ultimately, as regulators or government authorities, we don't have all the answers. And so that collaboration with the private industry to look at some of the problems and challenges and try to find technology tools to try to address it. So at ADGM, we have our digital lab, and we have Hub 71, which is our place that technology companies can come and test particular solutions to problems that we're seeing. And ESG has those challenges too. Data and data collection is another key area. And so we've seen that. We've now got over nearly 120 partners as part of our Abu Dhabi Sustainable Finance Declaration. So we continue to engage through that and through particular events. So ADGM is proud to be the principal climate finance partner for COP28. So we're having our Finance Forum event on the 4th of December as part of COP28. And again, that will provide another great venue to engage with our private sector stakeholders.
And Molly, with a focus on governance and expectations from investment managers, what are some of the challenges that boards are coming to you with, asking for advice and counsel, how to stay ahead of the curve, or how to create a better board, how to be a better board, how to be a better director in light of these types of, the future expectations of investment managers?
Being future ready is definitely on top of people's minds today, particularly directors, how to be future ready, how to be good directors, how to be able to perform their fiduciary duty as effectively as they can. So we do a lot of work with directors individually and as boards, help them identify certain dynamics, certain systems that will help them have better discussions in order to be able to take better decisions. Because ultimately that's what it boils down to. How can you effective decision making and what do you build those decisions on? But if you allow me to digress a little, if I may, it's fascinating listening to you, Lawrence and Brian, but it somewhat saddens me a little that we're talking about ESG from a business as usual, but how can we integrate ESG into it? Today, for ESG to succeed, it cannot be business as usual. It's very simple. We cannot try and fit a square peg into a circle, which is what I'm hearing, in terms of regulatory practice, in terms of, regulations, tools, technology. It's fundamentally, we need to change the way we do. We need to change the way we think. And in that context, I think we need to take into account long-term and impact a lot more than we currently are. Today, it's the bottom line. It really should be the triple bottom line. It really should be how will what I'm doing today affect my business and my community and my stakeholders over a 5-year period, not a 1-year period or a 2-year period, because today climate change is not an annual issue. It's not something that's going to show up on my annual statement, but it will be reflected in 5 years' time through my supply chain, through my suppliers, through my raw material, etc. So we need to find a different way of holding people accountable. And to your point, Brian, S, the middle child syndrome, I love that. I'm going to take it. I'm going to adopt it if that's okay with you. The E is tangible, so there are metrics that we can use. The G is also metrics that you can measure. The S, less so. So how do you measure this middle child syndrome that's acting up right now? And I think it's it's enabling your stakeholders to hold organizations accountable, empowering them to change the model of accountability. It's not limited to investors anymore. It's not limited to shareholders anymore. It should be it should be extended to stakeholders, and there needs to be avenues of grievances, communication for those stakeholders to be able to stand up and say, this is not affecting us as you thought it would. It's negatively impacting us, health, education, and any S element. Today, those tools aren't there. And today, that method of business is not there. And the method of public advocacy is not there. So I'd like to kind of really dig deep and fundamentally change the way we see things and the way we do things, because without that, inherent change. We're just going to keep trying to band-aid these issues. And one last point, I'm sorry if I'm rambling on. I think we talk about ESG as a practice, but in reality, ESG is simply a metric system. Okay, ESG is not a culture. ESG is not a system. ESG is not a methodology in and of itself. ESG is simply a metric system to measure performance. So in order to be sustainable, it's not directly correlated to your ESG performance, if that makes sense. But I'm happy to discuss that in more detail with everybody later. I'll pass it back to you.
Well, you bring up something, and this may be controversial, this may not be controversial, but the fundamental issue with, I think, ESG regulation is that we have to regulate that we have to regulate whether or not businesses are reporting, and it's moving more towards that. In order to get that kind of visibility and transparency for the investment community. I've seen, personally, my point of view is that the UAE and Europe have really, embraced it. Whether the, companies enjoy the regulation, that's another story altogether. But the adoption as more of a mindset seems to have advanced further in other regions. The U.S., there's we were talking about this earlier, Molly, there's a debate raging in the U.S., I know you know this too, and probably anyone reading the news. There's a real divide in the investment community about whether ESG is meaningful and important, or it's a burden. It's just a tax on corporations, and we shouldn't be doing this. This won't allow publicly traded companies to flourish. And I'm curious, to get your thoughts on that. Why is it that other parts of the world have seemingly, to some degree, gotten over that, but we in the U.S. we're just debating that to the death, and it's broken out into two camps, which I think the U.S. is going to be, debating that and struggling on the regulatory front, and we're behind the curve if you look at the comparables around the world. Anybody, Brian? Anybody jump in on that one?
I can talk about. Like you said, we touched on this before the session started, and I stand by what I think. It's meaningful if it's true, and it's greenwashing if it's simply a tick-boxing approach or mindset. So I think it does boil down to a mindset, a culture, a behavior system, but also. And this might be, again, controversial, it's also the financial modeling system. Today, the E and S are not financially modeled or integrated into our financial statements as much as they should be. We don't add a dollar sign to the impact of climate. We don't add a dollar sign to the delay in the supply chain or the difficulty in accessing raw material. Should that be translated into a financial model, then E, S, and G would make perfect sense to every organization. But today we simply look at profit. And that net value over a 12-month period will not capture the necessary E and S and G investments required to move the needle and create a change.
I think harmonisation is part of the challenge why there hasn't been enough happening. We're seeing at least more international standards now coming through, but there's still challenges within that. You mentioned the issues around double materiality. The company can sort of try to measure the impact of climate change on it, but how easy is it to measure the impact of the company on climate change, and then trying to make sure that that's disclosed in a transparent way that all can understand. And so, whether it's the EU approach or whether nuclear energy should be in the taxonomy or not, there's a broad range of questions. But what we are slowly seeing is more convergence at an international level. You're seeing the different standard-setting bodies, whether it's the GRI, ISSB, entering into MOUs and trying to harmonise things. As I said, it's a global marketplace. So the only way this is really going to work is if there's more harmonisation and consistency.
Yep.
Yeah, I'm not going to get into the U.S. political system, although I could keep going for most of the day and bore these people to death while I yell at them, and I'm not going to go down that path. But this is a long-term issue. This is not an election cycle issue, and so you need real leadership on here. And sometimes leadership is not popular.
Yeah.
But the investments we have to make across the ESG and principles is critical to us. And I agree with what Molly's saying, that regulation is not the solution to everything. You know, as a former regulator, well, I don't know if you're ever former and a regulator, but as a regulator, and a lot of it, you know, gets down to the solution to the problem is exactly what Mohammed Shalou was talking to us about earlier today, is the public-private partnership. That's not limited to financial crime. You solve cyber risk and resilience through public-private partnership as well, through engagement, not through a set of rules that come out. Rules don't necessarily bring trust. They bring more lawyers, but they don't necessarily bring more trust to the system. And so the regulators and governments overall have a role to play in creating an ecosystem where ESG and sustainable finance are part of every company's management thoughts, I guess, and in the regulated sector. And the Sustainable Finance Working Group has just recently, I mean, a couple weeks ago, I think, issued a set of principles for the banking and insurance industries, or all financial institutions, on, you know, governance, risk controls, internal controls, disclosures around just basic principles around climate change. Because this is, again, the effects, you know, if you look at Florida in the US or California, there are areas now that insurance companies say, I'm not going to touch that. And if insurance companies aren't going to touch that, it will be on somebody's balance sheet. It'll be in the form of a loss whenever a hurricane knocks out a house, and the bank says, well, you know, I have a hit to take. So there's going to be some massive changes in how people think about climate change and how people risk model climate change, whether they like it or not. It's not a popular thing, it's life.
Yeah, I live in Miami and I can't get hurricane insurance. And if I can, it probably cost me 6 times the annual mortgage. So we all just kind of live with it. We have 7 minutes left, and I want to get a final statement from each person. And I would encourage you, if you have questions about this, please come up to each one of these. These are fantastic experts in their fields with a lot of important messages and a lot of great advice and counsel in what they do. But maybe I'll start with Lawrence. You know, I think a lot of people, when they hear the word regulation, it's like, oh my God, you know, just more of a burden, more of a headache. But do you have a perspective on how organizations that are navigating regulation and trying to enhance compliance, how can they think about it as a way to be either as a strategic advantage, as a way to be a better organization?
Yeah, I think I touched upon that earlier, just in terms of the role that financial institutions have anyway, in terms of supporting the system and channeling capital to the right places. But ultimately, investors these days are only going to invest in companies that have a framework that is ESG sort of compliant and leading with best practices and good governance through it. And that will be required to be disclosed. So even disclosure standards now, they're comply or explain, but there's a push towards mandatory reporting, and that's happening. It's going to happen over time, and you know, we'll see that. And so I think what I would say is that, and I agree with my colleagues, regulation is not the only answer. This is something that we all have to buy in at all levels, and so and it has to happen sooner than later. And I think that's very much some of the feedback coming through ahead of COP28 and the global stocktake that's being done, and some of the announcements and results that will happen around that. And we hope to see that as another platform to increase the speed of adoption. And I know from all the regulators in the UAE and here in ADGM, we're always open to engaging with our stakeholders in this space to find new ways to address issues.
Great. Molly?
I'm going to take a different track, surprise, surprise. From a governance perspective, I think focusing on the spirit of the principles behind governance and not the letter of the law would be my 2 cents worth. Governance is essentially a set of principles, and understanding why those principles exist, and then translating those into a way that you can implement that is aligned with your organization is key. Having the right board of directors, advisory board, is the core engine of succeeding in handling all of these issues. Unfortunately, there isn't, a catch-all model that I can throw out there and say, this is what a brilliant board looks like. This needs to be tailored to your own organization. But I also want to highlight two things. Let's also look at ESG as an opportunity and not just as a risk, because there are a lot of opportunities in that space. And let's also go back and revisit purpose. I know it's a very broad statement, but purpose. Why do we exist in an existential way, but as an organization, what is the purpose of this business? To answer what question, to provide what service, to provide what added value. And with that, everything should, in theory, have a different perspective, a clearer objective.
Fantastic. And Brian, take us home.
Yeah, and I'm just listening intently to Molly, and I guess, now that I'm with EY, I said, come to EY for a solution to all these problems, but I'll let COP28 speak to the E part, and I'll focus on a little bit on the S, because we just came out of an environment which was heavily concentrated on S, whether people like it or not. The COVID pandemic was all about S at the end of the day, and the cyber risk and resilience piece came to life during that period. Everyone working from home, not being close to their IT person, clicking on too many things, giving up our data too easily. And I think we all realized how flat our organizations were at that time. And we had, at the DFSA, we developed a risk matrix for our employees during COVID that we identified the highest risk as someone new to the organization, therefore didn't have social capital to ask questions. They didn't have a friend base. They probably were new to Dubai, new to the organization. Number two, didn't arrive to Dubai with a family, so they were by themselves. And number three, didn't have a balcony. And so that person created our highest risk, we thought, in the organization. New to Dubai, without family, no balcony, couldn't go outside. We called that person every week and said, how are you doing, during the period where people couldn't come to the office, and offered help. So I think that's an illustration. You don't always think of them like that with the S, but organizations have to realize, if they haven't already, that they're flatter now than they were ever before. And the distance between people leading the organization and the people following that leadership is very narrow. And the future, I think, of every organization is managing the flatness of the organization to make sure stakeholders are respected.
So if I were to kind of sum it up, just in the comments, when we talk about the future and how do we navigate, how do we enhance our compliance, yes, they're the mechanics of it, they're the tools, they're the frameworks, but it sounds to me like all three of you would advocate for finding purpose. And ESG needs to become a mindset, and it needs to be incorporated into the culture of an organization, and make that shift. Otherwise, regulation is just one tool in the toolkit. I would love to wrap this up, and we appreciate your attention to this, and we appreciate your time, and I am so grateful to have met these three people and to have sat up here on the stage to learn from them, and I hope you all did too. Thank you so much.